Welcome to the Get Ready with Tony Stewart podcast. This episode, I'm pleased to welcome my old colleague, Neil Granger. Neil, welcome to the Get Ready with Tony Stewart podcast.
Oh, thanks, Tony. I'm an old colleague.
Well, old is all relative, and,
All in your
and
mind.
that's old in the terms of we've known each other for a
We've
long
known each other
time.
for a long time, yeah.
So let's dive into it. Before we do, of course, I'll want to let you know a little bit about who Neil is. Since 2008, Neil has focused his practice on consulting and expert work in the area of elder financial abuse prevention. Neil works with several district attorney offices as a member of their financial abuse specialist teams. He's testified in both criminal and civil cases and works with the investigative unit of the California Department of Insurance. Neil also works with the Washington State Attorney General. Neil's helped draft and has testified in favor of insurance legislation, which has helped strengthen financial protection for California seniors. Neil currently also serves as the chairman of the California Department of Insurance Curriculum Board. And on top of that, in case this isn't enough, Neil is also a member of the City and County of San Francisco's Forensic Center, which is a group comprised of adult protective service workers, representatives from the San Francisco County Ombudsman, City Attorney, District Attorney, police, conservator, medical staff, and others. As part of this, Neil is also active with the Veterans Aid Awareness Project, which this group works to publicize and curtail the financial abuse of veterans through the improper use of Veterans Aid and attendance program by commercial financial predators. As you can see, basically Neil does a lot of work with regulatory and enforcement agencies, and has even helped write the laws in terms of financial abuse protection. Neil, am I leaving anything out there?
I don't think so. I like long walks on the beach, but other than that, probably not. No, I think you've got everything. I mean, my area of practice, I've been in the insurance industry since 1984. My area of practice now is particularly in the area of elder financial abuse, and more specifically in the commercial enterprises that are directed toward the elder abuse of seniors. So, yeah, you got pretty much everything, I think.
All right, well, fantastic.
You and I met on the curriculum board, so.
Yeah, Neil and I served together, I think, for about 8 years on the curriculum board. The curriculum board is a board that's part of the California Department of Insurance that oversees education and licensing requirements for agents in the state of California. So that's where we both come from, and that's where we both have a common interest, is in promoting best practices in the insurance industry,
Right.
Which the listeners know can be a struggle sometimes in the insurance industry. And that's why, Neil's got a lot to say that will really give you some things to think about and some good lessons learned, as well as some tips on how to stay on the right side of things, especially when you approach a gray area. So, Neil, you've done a few things over the course of your career, and I know you still continue to do quite a bit. You play music, you're part of a band, you've done construction, and then somehow you ended up doing insurance litigation and elder financial protection. I mean, what was the path to get you here, and how do you tie all this together?
Yeah. Well, actually, I started out kind of unlike you. My brother is also a guy like you, Tony, where he has a background in finance. Came out of college with a finance degree. I actually came out of college with a music degree, and so I was a professional musician for several years. Always have had an interest in kind of, for lack of a better term, kind of blue collar stuff. So I actually began working also, as most musicians do. They pick up a day job as fixing cars. So I managed a couple of shops, and back in 1984, a guy came in to have his car serviced, and he had an insurance general agency. And so he said, hey, look, you seem like you're reasonably presentable. Maybe you'd like to, sell insurance. And if you do, let me know. And so that's how I got in. I became licensed in 1984 as a I think it was life and health. I can't remember, but anyway, life and health producer. And it was kind of an exciting time in the insurance. And I think you've been in it as long as I have, I think, Tony. And that was a pretty interesting time because these guys that I worked for had this novel idea about this product called term insurance. So typically what was available back then was traditional whole life policies. And as you know, the whole life policies were pretty expensive from a premium standpoint. So people who were purchasing them weren't able to get the volume of insurance they needed to protect their families because the premiums were so high. They were based on outdated actuarial assumptions and things like that. So the agency I went to work for, fortuitously, was focused on the idea of, what we really need to do is get clients enough protection. So, that if, particularly if a breadwinner were to die, that the family would be able to continue to, even though it would not be the same lifestyle, at least financially, it would be a salvageable situation, or the financial aspect of it was something that they didn't have to worry about. So we began selling a lot of different kinds of term insurance, and a whole bunch of companies that probably don't exist anymore. But people could buy affordably. Young families was what I worked with. The other thing that the agency I did, they had originated this mortgage insurance program where people would get a card in the mail saying you just took out a mortgage, this whole thing. This has become very common practice now, but it wasn't then. So term insurance was a relatively new thing. Mortgage leads, if you will, that's how we got our leads, were new also. And so I had the opportunity to go in and out of a lot of houses. All the meetings back then were done face to face. In fact, a lot of the insurance companies prohibited selling over the phone. Well, the internet, of course, didn't exist. So I would take my horse and buggy up to somebody's house and sit down with them and work with them. So that was kind of how I got started. And then shortly after I got started, some of the new, at that time, interest-sensitive cash value products came in, the interest-sensitive whole life products, the first universal life policies also began to show up. In addition to that, long-term care was something that was beginning back in, I guess it was the late 80s. We also had some pretty good disability policies. So my career started selling term life insurance. And, I worked primarily because of my background, I guess, and because I was really comfortable with kind of blue-collar folks. I worked kind of blue-collar areas. We all had areas we worked. And so I enjoyed it. I enjoyed meeting people, getting to know their families, and helping them figure out an affordable way to get the coverage they wanted. But it was an exciting time. It may be hard if somebody's getting into business now, put their mind around that. But so that's how I got started. And then I became partnership certified with long-term care, and we watched that whole long-term care insurance debacle unfold, probably together from different counties at that time. Watched the first generation of products come in, and then the products that were price-driven come in. So that was kind of how I got started. And that was pretty much, I worked for the agency for a number of years, and then I went off on my own. I became a general agent with Ohio National Life, and began to sell my own products, not just with them, but with other people too. So kind of took a step back from selling in the early 2000s. I had a thriving wine cellar business then, so I was doing that. Then I got back into the expert side of things about 2008. That's kind of the thumbnail, I think.
Well, that's great.
Maybe more than you wanted, but
well, I think it's good because you've had a lot of experience and you've seen the life and health industry change dramatically. And I think for those who are on the property and casualty side, there's a big difference, especially with life insurance. With property and casualty insurance, insurance is about insurance. It's about protecting the risk and paying for the pure protection of the risk. Of course, there's other components
Right.
involved with that, but there's nothing that anybody gets back after a certain period of time. Perhaps they might get a small dividend on their workers' compensation insurance or something of that nature, or, it's minimal. However, in insurance, the life insurance, traditionally, people had cash value life insurance policies, which they got to return their cash value. Now, as we all know, there's nothing free in life, right, Neil?
Right, right. And actually, I think my job at that point was to educate people about insurance, and because I would run into people every day, every week. I saw probably 8 to 10 people a week who had cash value life insurance, and of course, part of my role was to say, what insurance is about is it's about protection. And that's common with in common with property casualty, but most of these folks had been sold these insurance policies, told it was a great way to save money. And
Mm-hmm.
so a lot of what we had to do early in my career was to educate people about, look, this is a final paycheck for you. So what we have to do is, rather than working from the premium backwards, in other words, figuring out how much you can spend and then providing you with an expensive whole life policy when you've got 2 young kids at home or something like that. Let's talk about how much insurance you really need if you were to die. Why do agents sell you whole life insurance? Because they'd rather talk about saving money than about you being dead. But you got to talk about you being dead. And so that was a lot of where I went with it was, this is about life insurance. There are lots of ways to save money. If you want to save money, pay off your credit cards, right? But anyway, so a lot of it was just explaining to people that the amount of insurance that they actually needed was far higher than they'd been told that they needed. And also to help them understand that there are ways to affordably, especially for a young family where their expenses are high, their need is the greatest. You've got young kids, you've got a need for insurance. If something happens to you, you've got to provide for that. How do you do that? Well, you do it affordably. And so a lot of our job back then was to educate people about what term insurance was. And actually, Tony, it's interesting, you'd go to the property and casualty because that's what I talked about. I said, well, look, if you drive your car around for a year and you don't have a wreck, the insurance company doesn't go, wow, that's great, here's $5,000. They take the money. That's how term insurance works. And so that was a lot of what we were doing back then, was getting people to understand that they had a higher need than they thought, and they didn't have to pay as much as they thought they had to pay. It was, go ahead.
I was going to say, and I think that underlines one of the best practices, that I implemented. And I know you helped me put together the financial principles, and that financial principle is to get the coverage that you need,
Right.
rather than have it be based upon anything else. And I think, that's even in homeowners insurance is, taking a look at the replacement property, the replacement value of the property currently, and making sure that those parameters are up to speed, where in life insurance, traditionally, that was not the question. The question wasn't really about assessing the property risk. It was about how much insurance could somebody buy, or how much premium.
How much could you afford? Yeah.
Exactly. Now, let's get right to the heart of the matter, because what you've been involved with, and where you and I have found a lot of common interest, is in agent misdeeds and company misdeeds. And I think that those pretty much, I would say, I don't think I've seen any that have stemmed from term insurance. Have you, Neil?
No. Term insurance is maybe it's a self-selection kind of a thing, where if you're selling term insurance, you're already, as an agent, you're already committed to helping people find the right amount of coverage they have. Most of the time I've seen problems, it's with the cash value insurance. And that's because cash value insurance premiums are higher, typically the commission rates are higher. And I think a lot of times the agents who sell them are maybe not particularly as well educated as they might be about them and how they work.
Well, and I think that there's actually two lessons in there. One is, and I think this is a theme we'll continue to hit on through this episode, is that it's all about the customer. It's not about the advisor. It's not about the broker. It's not about the insurance company. It's about serving the customer and getting them a good product. And no matter what line of insurance coverage or outside of insurance, what financial product you're representing, it's about finding the thing that fits the client's needs and getting them the best product. And then the second part that you hit on is the educational component, because I think that if you educate the clients and the clients truly understand what they need, is you're not going to have too many problems with your book of business. I mean, would you agree with that, Neil?
Yeah, absolutely. And what I used to tell my clients, and my colleagues did too, was if you don't understand what I'm talking about here, or if you don't understand what I want you to purchase, then don't buy it. Because my job is to overcome kind of the natural conflict of interest that maybe insurance commission-based people have with their clients, and make sure that you understand what you need, number one, and give you options as to ways that you can make that happen. And so I think that the educational component of it is extremely important, and it's the first thing that I would do, and it was the first thing that this agency I worked with required us to do. You have to go in and make sure people understand what they're buying, and then if they understand it, and if there's full disclosure, and if they're given options, then your potential for problems drops astronomically by doing that.
Yeah, so if there's anybody here with a errors and emissions company, this is the lesson that you need to promote to the agents who are insured with you. And on the flip side, for agents and companies, if you don't want to spend quality time with your errors and emissions company, yeah, I think these
Nothing
are
like that,
huh? So, I know you've got so many cases that you've worked on that are just fascinating. Do you want to share maybe what you consider your most interesting, fascinating case?
Well, there are a couple. I mean, I can't really I can't name names, but
Of course.
but
That's a
I think
separate episode.
of course, my first case I did as an expert witness was very interesting because it was a major class action lawsuit against an insurance company who was using their general agencies and their field offices to promote trusts and trust mills, and so they were working along with their FMOs and their general agencies to give them materials in order to have the agents put on senior seminars and talk about how people needed trusts, and then using the trusts as a pretext for selling annuities, and pretty bad annuities. So I think for me that was an interesting case in the sense that it was the first time I'd really seen that this was an enterprise, that an insurance company was looking at this. You had a lot of insurance company people who were myopically sort of fixed upon the marketing of these products, and I'm not entirely sure that they really saw what was wrong with it. They just saw this was a way that we could get our products out into the field. That's pretty common.
Mm-hmm.
The first case was really interesting that way for a couple of reasons, and I think maybe for some of our listeners it might be interesting because it was the first case where I saw that what the insurance company did was to say, we're just giving you this information. The agents, whatever the agents do with it, has nothing to do with us. So I said, wow, this is interesting. The insurance companies are throwing the agents under the bus, So that was and being an agent myself, that was a really interesting thing to me. And it's also one of the early cases I did was with a large insurance company back east. And they were doing the same thing. They were marketing, I believe they were 457 plans to their clients who were CPAs. And so these CPAs would go out and sell these plans to people who were in their late 80s or mid 80s or early 80s. And there was no way to fund the plan properly. There was no way that they could disperse the money out of the plan properly. It was clearly financial elder abuse. But the people who were pushing it at the home office, this concept, were the marketing people who were looking at a way to increase business, right?
Mm-hmm.
And at the same time, there was everything was so compartmentalized. You can draw your own conclusions about why that's done. everything was so compartmentalized at the company that nobody had to take ultimate responsibility for this whole enterprise. So the company's saying, well, we have these marketing people, they do that. All our products are compliant with the Department of Insurance, and of course that was before we had a lot of the mandatory disclosure documents we have now. And so to me that was fascinating because it was the first time I saw where a company could structure their whole oversight operation so that nobody actually had to take responsibility for the bad behavior. I think, again, it underscored for me, if you're an agent, that the company's first line of defense, and in the litigation work that I've done, and even in the criminal work and things like that, the I have a good criminal case too. The company's first line of defense is to say, well, the agents aren't our employees, and they did this on their own, and we certainly wouldn't condone this. A lot of times when in discovery you go through the documents, you find out actually they did know.
Mm-hmm.
One fun criminal case, and I can actually give you the guy's name, a guy named Jeffrey Milton in San Diego, was my first criminal case. I testified at his preliminary hearing. He ran a trust mill, and if you don't know what a trust mill is, you might want to look that up. Basically, a trust mill is an enterprise where the creation of a trust is used as a pretext to obtain someone's financial information. That information then is, those assets are then converted into annuities. So the scam is to have a senior seminar, recommend that somebody get a trust, have an attorney with you or not. In this case, I'm not sure if there was a real attorney involved. This guy would set up these trusts and then get a list of all the seniors' assets, and then he would sell them an annuity. Unfortunately, the annuity that he sold them was typed up at his own house. So he set up a nonprofit. He actually set up a nonprofit.
Wow.
And so on this, it was actually, I believe it was sort of like an Allianz Masterdex annuity. He just took Allianz's name off and put on his, and would pocket the money. So he just pocketed the money. He wasn't selling. There was no insurance company involved. That was an interesting one. He ended up going to prison, I think, for 12 years because he'd done it multiple times. So a couple there.
Yeah. Well, I think, we're seeing a couple key takeaways is responsibility, the farming out of responsibility, especially as the insurance industry and the financial services industry has these very spread out distribution networks. I mean, we saw it recently even with Wells Fargo, where it wasn't a distributed network, where it was Wells Fargo internally promoting fraudulent sales that I think, everybody along the process has to be responsible for themselves and understand their role. But I think that we all need to take a bigger look at the bigger picture. I mean, when you agree, Neil, is that, you have to take a look at the forest that we're all operating in rather than the trees.
Yeah, I think you do. You have to have a much broader range of focus than you used to have, and if you're an agent or you're a general agent, you really have to be aware of best practices, and you have to really be aware of what the requirements are for you, and you have to go above and beyond those, I believe, to make sure that you're making full disclosure, that you're behaving in an ethical way. A lot of what I used to hear in these meetings I'd go to is, well, we've got E&O, we don't have to worry about it. It gets pretty ugly. I mean, I've sat in on depositions of agents, and it's not fun. So anything you can do to avoid being in that situation is really important. And so as an agent, if you make sure you dot all the I's and cross the T's and you do your best practice, and also you understand the broader range of what's going on out in the market, that's very important.
That's great. Yeah, I think that's great tips. I know I've done a couple depositions, and it's something I got to say, actually getting a root canal was much more peaceful because at least I could turn on my iPhone and listen to some music.
There you go. There you go. Yeah. least they gave you nitrous oxide,
Yeah.
right?
So, when you can compare root canal favorably to something, I think that kind of gives you an idea
Yeah, yeah.
of
Yeah, and
where
it's
the,
really not about the deposition, and I do believe, I mean, it is and it isn't, but as an agent, if you're selling insurance, the way you get to a deposition is by not being aware of the perhaps unintended consequences of your actions, and that's why here in California we're lucky we have a lot of elder protections in place via the insurance code. But as a producer, you still have to go above and beyond that. Make sure you document everything. Make sure that you keep notes on everything. If you're dealing with an older senior, get their family involved. Make sure that full disclosure is given. Make sure you understand the products that you sell. I mean, a lot of the agents, the agents that I've seen, in a lot of the cases I've been involved with, it's absolutely clear that the agent doesn't know the product. They're just told to sell it because of the commission. One of the first cases I did, in fact, the first case I did expert testimony on, was a case where the agent sold an 84-year-old illiterate, cognitively impaired guy $660,000 worth of annuities. Really bad annuities. I think the commission on them was 16%, something like that. So
wow.
you do the math. In deposition, the agent didn't know what an annuitant was. So educate yourself. Make sure you know what you're doing.
Yeah, and to educate your clients as well. And I think that's, it's a lesson that we can all take is, that all of our clients age, and as they age, we have to be aware of cognitive changes with
Right.
our clients and familiarize with ourselves. I'm going to ask you about that in just a sec, but there was one other point, but I think it may be slowly slipping away. So I'll get back to it in a minute. So Neil,
That's okay. I'm
you know,
67. I know how that is.
so as we go here is, what can agents do and insurance companies do? This is going to be a bigger issue with the graying of America in monitoring our clients and as a company, a book of business as Americans age. And we run into some of these issues where the clients may be losing some of their cognitive function.
Yeah, I think that's a real issue, and I previously mentioned. I think one thing that you can do as an agent, it's kind of a hassle, but try to get the family involved. Like they're typically, like I know, we just lost my mother and father-in-law this year, and my mom and dad passed away a while ago. But as their kids, my brother and I were intimately involved in helping them make financial decisions as they became older. So my sense is that if you're an agent, you kind of know what you should do, and that would be to put the interests of the client ahead of the interest in making a sale, and to make sure that client has the resources together. And I don't mean financial resources necessarily. I mean the family resources, the support together to be able to responsibly make decisions. A lot of times I would, if they had an estate planning attorney, I would meet with the attorney and talk about what might be best. I'd also recommend to people that they get fee-based planners, and that they use a fee-based planner to help them tell them what they need to do, and then they can shop for it with agents. From the agent's perspective, I think it's full disclosure. It's giving people choices. Universally, and I can't say this about much, but universally in the cases I've looked at, and again, I look at a lot of cases every month because I work with the city and county of San Francisco. I also work with some district attorneys and the attorney general and things like that, Department of Insurance. Universally, I've said that 3 times now, people are only shown one product. They're only shown one product, and they're told this is it. That to me is a big red flag. So if you're a producer and you're out there talking to people and you're working with seniors, I would say that what you can do is, first of all, make sure that they have the people with them who can help them make the decision in an informed way. that's the point of the 24-hour notice law in San Francisco, in California, is that the agent has to give written notice to the senior 24 hours before they meet with them, so that the senior has the option of having people there or not being there at all themselves. So that's the one thing, and I think I lost the thread on the other. But then it would also be to make sure that you show a number of products, and also to make, to give people time to make their decisions. And a lot of that is antithetical to the sales process, as you're supposed to go in and close them, that kind of thing. But again, work with their resources. Another thing that we've seen in elder abuse cases, one of the red flags is when you see a senior who's been asked to change their CPA and their attorney and their insurance agent all at one time, because that's starting to look like some kind of an enterprise to me. They're isolating the senior from their support system in order to manipulate them into purchasing inappropriate products or services. So those are the kinds of things you can do, kind of ease into using the support network that the senior has to help them make decisions and make sure that the family knows what's going on.
Okay. So, and that leads to the next question is, so let's say you're part of the distribution chain, but once or twice removed, either you're an insurance wholesaler, general agent, what have you, or you're an insurance company. How do you, when you're removed from the client, monitor this process, or what tools can be implemented to put in some best practices?
Well, look at the agent report. That's where I'd start. If you're a carrier, develop an agent report that's comprehensive. And if you're a carrier or you're a general agent, here's what I found in litigation is that the agent report does not become part of the contract. The application does. And often what happens is that the agent report is what the agent uses to sell the case to the insurance company. How much money they have, where is it, do they have this experience, that kind of thing, right? A lot of times the agent report does not agree with the required disclosure documents in the application. And so that's one place I would start. Make sure that the agent report has parallel information to the information on the annuity disclosure forms that are given with the application. Make sure that the client has an illustration. A lot of the abuses I've seen are, I showed it to them on the computer. Yeah. And there's some insurance companies that accept that, like, oh, I showed them a computer illustration. Make sure they have make sure they show the whole illustration. You and I've seen this, where it's like 9 pages long and they get 1 page with whiteout all over it or something. So I think if you're upstream in the distribution network, make sure that any kind of look at datings on trust. See if it's a trust that was just generated. Backtrack that. Look at the pattern. If you're a company, look at the pattern of the agent's behavior. Often you find the bad players have consistent behavior across their entire clientele. And take a few minutes and look at that. Look at where the checks are coming from. See if you're getting two-party checks. See if agents are doing 1035 exchange on policies when appropriate. A lot of agents will have their clients surrender their existing annuities and then take the money and give it to the new company so that they can avoid having the company having to answer that question, which says, are you replacing any annuities with this new one? And they say no. And then they have the client, am I giving a how-to manual here? I hope not. The client surrender their existing annuities and then take money and put it into the new one. And of course, 2 or 3 years later, it turns out, they got constructive receipt of value, and now the IRS is after them. And actually, a number of agents have been caught that way, that the client gets an IRS notice saying you owe X thousands of dollars in taxes, and they're like, well, but I exchanged my annuity. No, you didn't. You surrendered it and then you wrote a new check. Or my favorite, you surrendered it and then you endorsed the back of the check to the new company, and the new company took it. They took a second party check. So Anyway, that's my little rant on that. I don't know.
So, well, I think, some of that, of course, is very specific to annuities and some a little bit to life insurance. But I think the bigger lessons for the entire financial services industry is the FINRA rule of know your customer.
Right.
That's what if I understand correctly, that's what you're saying about the agent's report. And I think that's something, I don't know to what extent property and casualty companies use those forms, but I think with the graying of America, it's something that all firms should be using. I think they should be implementing, with some of those things, they almost border on money laundering rule, is the endorsing of checks and taking a look at those co-party checks and where the checks are coming from. That property and casualty people can also be part of that process, and the property and casualty insurance companies, property and casualty insurance agents who are often using escrow accounts that the insurance companies, I don't know to some degree. So if we have listeners out there, my area of knowledge is minimal here, but is the monitoring and practices that you set up around the escrow accounts.
See, I know nothing about that, but that's interesting. Yeah.
Yeah. So, there's areas that we can all take, from all facets of the insurance industry. And if you're a consumer who's listening to this, the lesson is, to pay attention, to know what's going on, to become educated, to take a look at, like you said, if a guy's printing up annuities, on his typewriter, if you're buying it from Bob's Mutual Insurance Company, that might be a tip-off. Is that you want to make sure you're doing business with a legitimate agent and insurance company, and we're fortunate enough to have the internet where you can easily do research. Sometimes it is hard to tell if a company is real or not. I mean, Bernie Madoff got away with his shenanigans for decades and fooled some people who possibly should have known better. However, a lot of the stuff, it's just like getting the phishing emails. You can pretty much tell when there's a misspelling, and instead of State Farm, it says State Farmers Mutual, that maybe there's something wrong there, that State Farm probably knows how to spell their name by now. After
they probably do. Yeah, they've done it a few times.
So I think there's things that we can all learn. So Neil, we're not going to have time to really get into legislation, unfortunately. So definitely we'll want to have you on for that. But
sure.
A couple questions, I want to leave on is, how can people stay on top of these developments and stay ahead of the curve?
It's hard to do. Consumers, I think you can. Department of Insurance has some stuff on their website, but there are some entities out there, a couple of nonprofits that I think have good information on this. Tony, I think one thing you can do is get your book, because I think that, and I was not paid to say that, because I think that the big problem is that as a consumer, the big issue is that you have to take some responsibility on yourself, and it has to be, you have to put a little bit of good effort in to understand your own situation. And if you get a book like the Get Ready book, and I've actually given that to my daughter, my wife has, we're filling it out. It's the kind of thing where it gets your information in one place where you can look at it. So I think that you can start with a resource like, well, any of your books really, but the Get Ready book is really good for a way of having everything in one place. Then I think, educate yourself. You could go on a website like the California Advocates for I just forgot their name, Canner, California Advocates for Long-Term Care. Anyway, canner.org. They have a lot of resources on Medi-Cal, Veterans Aid and Attendance, wills, trusts, aging in place, how the nursing home systems work and all that. They also have an 800 number, so they actually have a hotline you can call in if you you have any questions or you think there's something fishy going on, you can call California Advocates for Nursing Home Reform. That's it. I got it. Call them up, and they can talk to you about it. There's also the California Elder Justice Coalition. They have a lot of good resources on their website. CDI, California Department of Insurance has stuff too. But the way I think too, that's part of what you can do. And if you're a producer, some of these nonprofits like Cantor has a conference every year. Go to the conference and spend a couple days talking to people who are in this field. It's harder to find information on financial abuse of seniors than it is physical abuse. But what's becoming rapidly recognized is that it's a real problem. So staying in front of those trends, I think that would be how I would do it. Anything you can do as a producer to further educate yourself around this will make you more valuable to your clients. And certainly, as a guy who's aging, I want to have people around who know this stuff.
Yeah, well, and I think that's so important is that, across the whole distribution line, ending with a consumer as a part of the distribution line of a financial service product and the ecosystem, is that we should all be paying attention to these resources that are being put out there by various nonprofits and regulatory bodies, and take it upon ourselves to stay current with what the issues are. Are there any thought leaders in this area, or newsletters or websites that put out regular information you might suggest to people?
I'm kind of in this weird little cul-de-sac, and I'm part of a listserv that's a national listserv, but you have to be invited to that, so it's kind of hard to get into. I think that I don't know. You might be a better resource on that than me, Tony. I think that these kinds of podcasts are highly informative. And then I do think that I'm around some people like you, like Prescott Cole over at Cantor, Shauna Reeves, who's the director of Elder Financial Abuse at Elder Financial Abuse Prevention at the Institute on Aging, and is also a board member of the California Elder Justice Coalition. Those are kind of the people I use, and like I said, I occupy kind of this strange little corner of the world. So I'd certainly be happy to let you know if I think of anybody else. It's a challenge. It's difficult because a lot of what I learn about what's going on is just through my own research, looking at persons of interest, if you will, or enterprises of interest. I also have information that I get from the Attorney General here in California, other district attorneys, the Department of Insurance, and all that kind of stuff. So I don't know. That's really kind of all I've got with that. I'm sorry.
Oh, that's okay. And we'll put those in the show notes for our listeners. You don't have to scramble.
And Cantor is a great resource. If you think you have a problem, you can call them. They have an 800 line. They'll get on it for you, and they'll find you resources if you think, as a consumer, if you think you're having a problem.
So just a quick note is, will they help with people outside of California, or at least point you to resources outside?
I would call them. They will point you to resources, and if you call them with an annuity question, they'll probably call me. But yeah, they're a great organization for that. So yeah, they have an 800 number. You can call them all over the country. And the interesting thing too is they're interested in that. I'm interested in that because a lot of these really bad enterprises that are out there are nationwide. And in fact, some of them don't operate in California because of the legislation that we've been able to pass over the last 10 years to prevent them from doing so. But they're all over the rest of the country. So we want to know about them.
Yeah, and I think we definitely don't have time to get into this, but of course I'll throw it out there as a teaser, is that I think it's the balance of regulation and legislation and free market, and the tension between those that leads to positive or less than positive results as we talk about the companies not doing business in California or not selling certain products in California because of the regulations and legislations. That I think that says something about the value of having some regulations and legislations, and that we shouldn't be scared as members of the insurance industry by regulations and legislation. As of course, as we all know, is sometimes it can get too burdensome. I know that I've had some long-term care insurance applications that approach 40 to 50 pages in length, and then the consumers are given 100 pages of disclosure documents, and we all know exactly how much of that information the consumer is going to take and be able to consume. That number quickly approaches zero. I think the greater the number of pages that are put out there. So I think that we all need to understand that there's that balance, and that we all play a role in helping out with that balance. So Neil, thank you so much for coming on and sharing your thoughts and sharing some of your experiences with us. It's been great to have you on. Just one last quick question. Where can people learn more about you?
Well, you can go, I guess, my website. I have sort of a funky website, but it tells it tells you my history and all that. So that's neilgranger.com, neilgranger.com. And I better update it. I principally now I do consulting expert work. I'm not doing any testifying expert work. But what I really am interested in are these kinds of issues. And my main area of interest, as I said, is sort of commercial enterprises directed at abusing elders financially. So you can read about me at my website, and you send me an email.
Sounds great. And we'll put some information in the show notes on all this. So Neil, thank you again for coming on the Get Ready with Tony Stewart podcast. It's been a pleasure having you on.
Thanks, Tony. Great service you're doing here. Thank you so much.
Thanks. Bye.
Bye-bye.